For more on the strategic shifts taking place at Google during Larry Page's first week back at the helm, we turn to Ken Sena of Evercore Partners. Ken has an equal weight rating on Google shares with a $640 price target as the stock is trading at $580, and he is in the minority. He comes to us from our New York studio. So, Ken, you're one of the few analysts who are negative on Google. What do you think the big risks are? Well,
I think I wouldn't say I was quite negative. I'm an equal weight rated on the stock, but the bigger risk that I focused on when in not doing an overweight was really the longer-term implications of social and the ability for social to provide a ranking based on people's peers and based on people's friends. And I think that's something that Google is pushing hard to try and make headway in. If you look at what they're doing recently with the +1s, it's really an answer to the Facebook likes. And last summer when we initiated on Google, we spent a lot of time focused on the implications of Facebook's Open Graph and in coupling with the likes, what that could do in terms of being able to monetize across the broader web. So we think this is definitely a response by Google in that respect.
So what do you think of this reported memo from Larry Page talking about how Google needs to focus more on its social strategy and even saying that bonuses are going to be tied to the success of it?
Well, I think it's clear that social is a very important part of it should be a very important part of their strategy. It is an important part of their strategy. And I think it's just important in terms of how businesses are looking at their customers. And what this sort of stems back to is businesses want to have a better relationship with their customers. I think to the extent that they know their customers better, that they know who their customers' friends are, what they like, that's all very important. Facebook's providing them that right now. I think Google wants to step in and say, look, we can do it just as well as Facebook.
Ken, I think you need to embrace your inner negativity. If you're going to be equal weight and the rest of the world's positive, well, we like you being negative.
I was underweight for a period of time, and I think I focused mostly on the social risk, and that was last summer. But I think when you step back and you look at that Google's core business is also showing accelerating growth, I think that's actually a pretty positive sign, at least near term. I think longer term, there are risks in terms of how people search for commercial products and whether or not they go to Google to do that search versus looking at apps on their iPad or requesting that on Facebook. When we launched, one of the issues we focused on was also Facebook's relationship with Microsoft, and the fact that what Microsoft and Facebook are working on is that when you do a search on Facebook, you'll be able to basically see what searches are important to your friends and what those results are, as well as having that backfilled with a certain amount of algorithmic result. And I think that, and then when you flip to searching on Bing, that you'd be able to see your search results filtered too in a way that basically, it personalizes the experience to the user. So I think that, there are some certain sort of longer term risks, and we focused on those in the past. But still, when you step back and you look at the progress that they've made in mobile, in social, in video, I think, and in display, I think that you have to be a little bit balanced here, particularly at the current valuation.
So I think it's intriguing, however, that you see sort of cracks in the ship. What number do you think we'll really start to see if this thesis proves to be true? Is it going to be growth in paid clicks, or I highlighted that in my drill down, or something else?
Well, I think you'd probably even start to see it not just in paid clicks, but you could start to see it, I think, in queries. I think right now when you do a search on Facebook, the experience is really pretty poor. I mean, you have to know exactly what you're looking for from a product standpoint. I think that when they start to roll out kind of version 1, you're going to probably see the potential to see people find and discover and share around purchasing products. And I think that's when it becomes a risk to core search. So, for right now, yes, trends look very good, and I think that they've got some really strong tailwinds, but it could be just simply seeing a query shift. I think when we look at how people tend to look at the search market, they tend to look at search share in terms of the established players. I see that changing, and the field will open up.
Ken, what about what Google is doing with YouTube? I mean, this is a major change in strategy for them. Can Google become a real competitor in the living room, and will this be a moneymaker for them?
Well, I think, I don't see this as necessarily that new. I think Google's talked about trying to bring channels to the YouTube experience for some time. I think what they are trying to highlight, though, too, is that, there are a lot of opportunities for content. There are audiences that, where possibly the programming doesn't necessarily justify sort of network exposure, but could definitely find a strong audience online. I think that could be more of the area that they sort of work into first.
All right, Ken Sena, analyst at Evercore Partners, thank you so much for joining us here
Thank you very much.
on Bloomberg West.